So yeah, as mentioned just now, right? This is just a normal, very open-ended, chill discussion lah. Nothing, not a live trading session. We just go through what we are seeing in the market and Q&A session. Yeah, very simple lah. So can you briefly highlight what you normally do before market opens? Look at S&P, Dow Jones, Nasdaq. I don't really. I mean, I just try to get as much information as I can about the market. So sometimes I will look at Bloomberg news. I try to see if it's a earning season, right? I try to see which company's earning report is coming out, all these kind of stuff lah. But normally I don't really look at charts or what that going to impact my trading, because most of the time, right, my trade plan is already in place before the market opens. So nothing I see will like kind of make me change my trade plan lah. Unless of course maybe I want to buy something and then end up the pre-market is like the whole thing get down, then maybe that kind of stuff, then I will consider lah. I will reconsider again. But of course, usually around this hour, I will look at the scanner also. But unfortunately for yesterday, I mean, if we look at the scanner today for the US market, right? Let's look at the US market. That is it's empty. It's empty. US was quite bad yesterday lah. So it's empty. So I don't really have any potential stuff to look at also. But another thing I like to look at is this one. You can come to TradingView. It's free lah. You go and see the TradingView. You click USA, especially. I mean now definitely you are looking at US stuff lah. So what you will do is you go to this here, right? And then you go and click top gainers. So this one is just to like browse through, see what are the top gainers for yesterday, especially, right, since the market overall was quite bad. It might be interesting to see which are the counters or companies or even the sector that is like doing positive compared to everything else that is red. So for example, here you can see we have health technology, we have mainly health technology, but we also still have some tech counters that are still doing quite okay. given how the entire tech sell down is happening, we do have some technical, I mean tech counters that are okay lah. So it's very interesting. So I'll just go and like roughly look through. So you have this one went up like 45%, but now it is going to gap down by a bit. It gap down by 8%. That's a lot. 8-9% is quite a lot for a single day gap lah. And then you can see that this counter from November until December also kind of like stagnant. So it somewhat reflect the S&P index lah, until only like early January it start to go up. So it will kind of like, you will start to wonder, hey, what's going on here? Then I'll just roughly take a look. Is it earning? No, it's not the earning also. It's not the earning also. So maybe something going on. So if I'm really like very interested, want to find out more, right, then I'll next go to the news to see what's going on. But this news is the TradingView news here is cannot make it lah. It's all from empty newswire. I'm not even sure what is that. Yeah. And yeah, also so like health service, I won't look at it lah, since it's pretty, especially biotech counters, right? They tend to be very volatile and they can like gap up, gap down very a lot lah. So I don't really like US biotech companies. But let's look at other technology. So next one is this one, cloud related stuff. So this kind of stuff still okay. This kind of counter still okay, because yesterday we do have some technology counters that rebound a bit from the bottom. So this kind of counter, I'm not really surprised lah. I'm not really surprised that they eventually recover quite a bit. In fact, counters like other counters like Lemonade lah, Palantir lah, I think they did recover quite a bit yesterday also. Like, no, they didn't recover. Oh, they even dropped some more. Okay, yeah, but yeah, but my point is that that kind of recovery is still quite okay lah. So I will tend to look at this kind of stuff, and sometimes I will look at I will log in Bloomberg Live also. I got subscription for Bloomberg Live to see, like, aside from stock, right, what are the other stuff that is happening, just to get the general news lah. For example, the yields are rising, there's a sell-off in the bond market, and then you have all the rate hike related stuff. So all these kind of news, I try to get myself updated. Although in terms of trading, right, I don't really make use of all these news, but I mean, it is still good to know what's going on in the world lah. So that's what I will normally look at, and of course, since Hong Kong market was quite recovering quite well, I will look at some of the Hong Kong counters also to see like what's going on in the Hong Kong scanner lah. I mean, since got time anyway, so might as well see. So tomorrow morning don't have to wake up early and see lah. So you can see that all the finance stuff, finance related stuff are recovering. And I think, in fact, quite a while back, we do have quite a few finance counter on the stock scanner showing up. One of the counter I had take note was the Postal Saving Bank. Postal Saving Bank. Let me just type it out. Yeah, Postal Saving Bank of China was doing very well. In fact, it came out on scanner twice here and here lah. So this is what I usually will do. Also, I will look back at some of the counter that came out on the scanner previously, and I will see how they are performing, and eventually over times, right? I try to see if there are any patterns or what. So these are normally the kind of stuff that I do pre-market lah. But of course, the main important thing is that I don't really look at the S&P and then see, okay, tonight I'm not going to trade, or what, my trading decision is not affected by what I see in the pre-market lah. And this is also mainly due to the fact that I don't day trade, or I don't like scalp or what. So normally it doesn't impact me much. So if you guys have question, right, just ask, just ask, because if not, I will just like do my own talking and sharing. So one thing I was quite curious recently is that yes, we do have the tech sell-off, all these happening, right? So previously, the last time we have such a very scary sell-off was somewhere around in 2020 September, October, this period. I think this was quite a scary sell-off, and it was considering the fact that it actually broke through the COVID-19 high, right? And of course, we will kind of expect this to be like the resistance, and then it break through. So definitely there will be some bearish players, bearish sentiment, and when it dropped this much at the pre-COVID resistance, right? There's no doubt that there will be bearish sentiments lah. And of course, even back when in trade war period, right? We have this period where after hitting resistance, it just go down and down and down. So even here, it does went down a bit before it start to recover lah. So normal. So as I was looking through all this, right, something caught my attention. I was just curious, so I tried to go to Google, and then I go and find how was the news like during this period. So all the news article that a lot of websites are coming out, right? What was their tone? How are they phrasing their articles? And I think it's quite entertaining and quite surprising to see certain things. So let me show you. Let me show you. So I actually search stock market S&P, and then I search 1st of October to 31st of October. So we can see this one is 2021. So let's look at from 2020 now. Bears have reaped control from bull, and S&P, if S&P fall below this level, it could get ugly. So 31st October. Hey, where is it? Okay. So 31st October is like somewhere here. Right at the right at the lowest level. So that's the thing. Don't invest your emergency fund seriously. Yeah, this one definitely agree. The confirm, definitely guarantee chop agree. Market plunge in uncertainty about second term and second wave. As market falls, investor fears build assessing odd of a year-end comeback. Okay, stock market has put in a thought an enormous bubble has already burst. This one very this one sound very scary, and in fact like the date that they say bubble burst is like the date that it eventually marks the bottom lah. So I mean, when I look at all these, right, I'm not trying to sort of say that they are like the market is still very good, the market can still go up, the market is still bullish or what. I'm not trying to say that. I mean, my view is neutral in the sense that I see what the chart tells me. If the chart continues to go down, then of course we will have a bearish market and we will start looking at short positions, and we will reassess how we enter the market also. But when we look back in hindsight, and if we look at how the general news is like putting out their articles and the tone that they put out, it's quite funny lah. It's quite funny. Twitter hacks plunge stock market real once again. Energy stock now account for less than 2%. Okay. What would Joe Biden win means for the market? Stock boost. Second wave correction will send stock down by 30%. So this one is another those kind of very over the top fearful stuff lah. Stock market just wrapped their worst week since March. Dow caps volatile October with worst week finish. Tech losses drive Wall Street down again. So I think each time the S&P or the Nasdaq drop is always the tech lah. It's always the tech that is causing the market to drop. Oh, hello, we got more newcomers. So those who just joined, right? This session is the same as yesterday's session. We are just like doing random discussion, just chit chat, and if you have any questions or whatever, I will try to answer lah. So now what we are doing is we are just trying to look at in 2020 October, when the market dropped here, right? It was quite a scary period because not only it dropped once, it actually dropped the second time, and I think there was a lot of fear during this period, and we are trying to see during that period how was the news situation like. What are the news outlet reporting like? Is it like, oh my god, the bubble burst, like, oh, the entire market is going to crash, and that kind of stuff lah. So by looking at this, right, we have a fresh perspective approach lah, because right now maybe we are in a similar situation where the news is extremely negative, everything is dropping left and right. But if let's say eventually stock market recover, right, then this moment it just pass without us doing any kind of critical thinking or what. But when we look at something that happened 2 years ago, right, it kind of like shed a new light from a new angle, and it is also a lesson that we have to be neutral. It's not to say that maybe whatever the news outlet are saying is wrong and the opposite will happen, but rather we must always remind ourselves that to remain as vigilant as possible. Like follow your trade plan and stick to your plans lah. Stick to your plans. Don't because of suddenly let's say you have your own trade plan. Don't because of one day the some news say the market gonna crash and then next day you just exit because of like too fearful or what. This one, Dow tanks 1,800 points on the worst week for stock since March. 800 points. Let's look at Dow. Wall Street 30. This one. Let's look at Dow. So it's trying to say that since March, Dow Jones dropped 800 points. Is it what it is trying to say? Sorry, Dow Jones dropped 1,800 points. Yeah, it is. I mean, it was close to 3,000. Close to 3,000. If it dropped from 29K to 26K, so it was a 3,000 point drop. Weekly wrap, best 529 plans. Stock market is overvalued. I find market watch I find market watch always like I don't know, they are like perma bear or what. They always have the most overreaction lah. Stock market live Thursday. Dow Jones gain 100. Netflix hike price. Oh, Netflix was hiking price back then already. Dow Jones closed more than 150 points low. Worried about why COVID-19 whiplash won't last, and S&P 500 will be 13% higher by June. So this one was like on 29 October, also by Market Watch, and then like one day later, the tune suddenly changed. Dow Jones Industrial snap 4 season losing 3. So so these are in from the later date to earlier date lah. S&P will tumble up to 20% before the inauguration, as investors have lost hope that COVID-19 blah blah blah. So this one was 28 October. This one was 28 October. So if we look at 28 October also, it was like somewhere close to the bottom already, and it was like maybe only 3%. Not all momentum rallies are led by tech. This one I don't believe so. I think majority of the S&P and Nasdaq are led by tech lah. I think when you look at Dow Jones, right? Dow Jones is usually the bank and the bank and McDonald's. Bank and McDonald's is the one that usually pushing Dow Jones up. Bearish momentum accelerate. S&P ventures under last ditch support. Dow plunged more than 9,000 points as COVID spike. Wednesday, biggest loser in stock market as 97% of S&P 500 drop. Yeah, true. I mean, if you look at it, right? If you look at the recent drop in the market, is like very, especially US market. It's like we can say that tech are dropping. Tech is causing the sell-off, but I think the only reason why tech is causing the sell-off is because Nasdaq and S&P 500 have a lot of tech counters in them. So because they have so much tech counter, right, it does seem that they are causing the tech sell-off lah. But if you look across, right, you also have other sectors that are dropping also. Like for example, the bank are dropping. The bank are also dropping. JP Morgan, Morgan Stanley, Wells Fargo still doing all right lah. Wells Fargo, but bank are a bit of a mixed bag. Those that are doing well are doing quite well. Those that are dropping are like dropping quite bad. But we also have all the manufacturing and all the energy counter that actually retraced yesterday also. Devon Energy, what happened? There's a big gap down. Marathon, there's a big gap down also. So I think because oil price have retraced. The oil price retraced recently. index. The oil price retrace. Where's my oil price on there? Not really. I mean it's still all right lah. It's still all right. Still all right. Not like a very big drop. Not like a very big drop. Then we also have all the Ford drop 8%. It's like almost back to my entry level already. Almost back to my entry level already. And General Motor kind of like still okay. General Motor is still okay. Tesla is surprisingly surprisingly resilient during this period. It is still within this. Caterpillar, let's look at Caterpillar. Caterpillar also dropped quite a lot yesterday. So it does seem like the entire US market is dropping. It's not just the tech. I think of course for tech counters, right? They were dropping since November. So I think that's what leading the so-called the tech sell-off. But yesterday was slightly special in a sense that almost every industry is dropping left and right. And in fact, we do have other so-called much more how do I put it, much more resilient sector like the Costco, retail department store, and the other one is Home Depot. Home Depot, home improvement chain, all these also dropping quite bad. I think maybe they could be related to COVID also, because like when COVID spike, right? Like normally all these retail chains, they perform quite bad lah, because like social distancing. But I think I think on US side, I'm not sure if they are doing social distancing or all this kind of stuff. And considering the fact that we have those COVID team counter like Zoom, DocuSign, DoorDash, all these like dropping left and right, right? So we have those counters that are doing well during COVID and counters that should do well without COVID. Like both of them are dropping. So almost everything seems to be dropping for US. And yesterday S&P was quite a little bit disappointing. Initially it was like quite green. Then towards the end of the day it just continued to dive down. So now we are at the, I would say, critical level. I think this level is quite critical. And if we drop like way below this level, right, I think we might be in this kind of period. We might be in like this kind of period, or this kind of period where we might have a extended sell down that's going to come. And I think when that happen, right, of course we are definitely out of the S&P trade ready since the stop loss was put below that level. So at any price above this level, right, I don't really think everything is bearish yet. So still kind of doing quite okay, as long as this level is maintained. So once this level drop, then of course we shouldn't be averaging down or we shouldn't be adding on to our risk, or we shouldn't be like clinging on to hope that like it's not already there. So that kind of stuff. But we also have to be careful that when we place trades, right, like for example, yes, this is the crucial level, but we cannot place our stop loss right there. And the market doesn't know this is a support. It's not going to touch and go. It's not going to touch and go. Oftentimes you have situation like this, like previously this was a support, but it still break and go. And even like previously, or maybe here also, I think this one's still okay. This one's still kind of like right on the dot there. But we have to be like, better be safe than sorry you only need to kinda that one time where your position gone, then your chance to recover along with the market gone. S&P 500 is actually still okay, but Dow Jones, right? Dow Jones is very notorious. Dow Jones is extremely notorious for like dipping below and then suddenly recovering. And that's why I don't trade Dow Jones. I choose to trade S&P 500. Of course, Nasdaq is a little bit too too tech heavy, a little bit too tech heavy for my personal taste. So S&P is a nice in between. So if you look at Dow Jones, right, you see here, you see here is very headache one. You see this whole, it can cause you to have heart attack one each time price come back that level. Like the moment price is here, right? Maybe you will think that this is a crucial level, you don't want it to break, but it keep coming back, it keep revisiting. And for example here, like if you try to play the support, or worse yet, right? Worse yet, if you try to like short the breakdown here, right? It can get you into trouble lah. Like for example, now you look at the chart like this, right? It's like everything very rosy, very clear uptrend. But go and use this function. I think this function, this is the replay function. This function, I'm not sure if the free version have, but the cheapest subscription level should have lah. And you click replay and then you can click on the bar lah. It will kind of like remove everything behind, and you can replay back how the chart goes. So it's a very cool function. So I mean, if you look at the chart like this, right? I believe there will be a lot of bear people are going to short this lah. A lot of bear people are going to short this, and if you are a bull, also you might get very fearful. You might get overly, oh my god, tired out, like shit, it broke the support. And then you go and cut your loss. So it's not friendly. It's not very friendly. And even back here, you can see a similar case here. You can see a similar case. So I don't like to trade charts that are like this lah. I call this not a clean chart, and it can make you it can make you very heart attack, cannot sleep. Nasdaq is still quite okay. It is just that Nasdaq, when it dropped, right, it actually dropped a lot. The drop, the retracement for Nasdaq is very big. But of course, in return, right, the gain is also a lot. So if you look at Nasdaq from, oh, I have a message. China big tech is making a comeback while US is bleeding belly. Yes, China big tech are actually making a good comeback. Because like unlike US, where they are talking about rate hike, China in like they are doing the total opposite. They are actually slashing their rates lah. So if I was looking at some of the China counter, but I mean, I don't really like to trade individual tech counter on the Hong Kong. Is slightly risky. But I was looking at this. What is it? Where's HSD? Still very strong. Hong Kong is still very strong. HSD. This one. Yeah, I was looking at this because this was a 5.3% gain, and this is on Singapore SGX. It is a ETF. It is an ETF for all the Hong Kong tech companies lah. So you have all your Hong Kong tech counters here, things like Lenovo, Xiaomi, Tencent, JD, all these stuff here lah. So instead of buying all those counter one by one, right, I was thinking of going for this trade, but I want to be a little reserved first, because what we do not want is, personally, what I do not want is, I do not want to like suddenly become bearish on the US market when overall we haven't entered the bear zone yet lah. And then at the same time, I don't want to suddenly become super bullish on the Hong Kong market and end up what can happen is the US recovers and then Hong Kong make a lower high and then start to retrace back. So now instead of recovering back with the US, I switch all the funds into Hong Kong that are start to drop back again. So that's something that I want to avoid, and that's the reason why I don't jump over. I'm not looking to jump over that fast, because let's say, right, let's say if Hong Kong is indeed going to recover long term, then I don't need to be really FOMO. I don't need to be really FOMO in the sense that I don't need to catch this portion. I don't need to catch this portion. I don't need to catch this 11% or 12%. But what I can do is I wait for like more better sign, like better higher low to show up, and then I can like buy here. And the moment I buy there, right, at least I have a good I would say confirmation that okay, this one could be a recovery. And then if that recovery is strong, then I can probably catch like maybe 20-30% if we are able to get back to previous high lah. So I do not want to, like, because of this 10-12% I jump in, and then after that I get caught in a in a lower high moment lah. Yeah, correct. U-turn. I don't like to chase the short term lah. I don't like to chase the short term. And in fact, these are one of the reasons why I personally do not trade things like gold, or I do not trade things like even forex, because the way the forex pairs and gold move is you really need to catch the bottom. You really need to catch the bottom. If you don't catch the bottom, right, it's very hard to trade. It's extremely hard to trade. Like for example, this, right? For example, this, if you want a profit here, you have you have to catch this here. You have to catch that here. And I mean, for some trader it works, for some trader it works, or it is their style. Like for example, like Sonic R, they are very good at using this style lah. But personally for me is not my style, and this kind of movement is very different from stock movement, and we cannot like go and transfer the strategy one-to-one lah, in a sense. So I am keeping my eye on the Hong Kong side lah. And what I will feel is that, let's say this one, if we can have some consolidation, and if we have some retrace, and if we kind of can show that it is still can go up, right, then I will buy that breakout and then put my stop loss below the next consolidation lah. Because at some point it will probably need to consolidate for a while. I don't think that it will like one straight line shoot up like that also. Like for example, in this case, right? In this case, I think it can consolidate for a while. Then after that, we can probably buy the breakout there and the stop loss there. So I don't mind giving up this portion in order to not rush in and not bottom pick, because you can, like, maybe you pick here, right? You pick here. It can also be this kind of level lah. It can also be this kind of level where it go down some more. So it's slightly risky. It's slightly risky. So I rather give up this and then buy the breakout trade, and then I will still get. I mean, I was still able to get sufficient lah. Question: Tencent 19 to 20 Jan not counted as higher low, right? Let's look at Tencent. 19 to 20 Jan candle not counted as higher low for Tencent. Let's look at this. Okay, this one, right? If you are looking in, it is, I definitely will not count as a higher low unless you want to trade within this range. Unless you want to trade within this range. If you want to trade within this range, right, you can just go to a 1 hour chart, and then yes, maybe this one is a higher low, you buy, then you can trade this lah. If it continues to go up lah, if you want to trade within this range. So this is like more of a lower time frame really lah. And if you like that kind of trading style, then maybe it can work for you. I don't know, but the thing is, for example, here, right, this could be a higher low also. This could be a higher low also, or there can be other cases like it's this the issue with back testing now, because all the chart is already play out, right? You can't really back test properly also. But what you will notice is that within this range, there can be quite a lot of, I would say, a false higher low lah, a false higher low. So for example, right? For example, if you trade this thinking that this is a higher low, then you will get caught here. And what is essentially happening is this is a lower high on the upper end. So it's very hard. It's very hard to determine correctly, because this is a consolidation zone and price is very noisy. Price is not trending. In a consolidation, right? Since price is not trending, it doesn't make sense to go and spot higher low or lower high or whatever. You have to wait for the price to trend and then you spot that higher low. But since this is consolidation, right? There can be fake higher high, there can be fake higher low, there can be fake lower low, and all sorts of funny stuff lah. So it is when during this kind of period when we try to like use moving average lah, what lah, when things can get hard lah, and it's easy to lose money. So personally, what I would think is that this whole area can consolidate. And in fact, if you look at here, right, it's very it's very scary also. Like, okay, this is low, then this is higher low, and then it break the low again, and then now this one, so is it gonna break again? So it is a clear sign that this is not in the trending mode. So if it is not in the trending mode, right, you do not want to go and like assume and play lah. If you want to play the range, then definitely you can just simply try to like buy here or short here. You can play this range lah. But the danger of playing this kind of range is also that at one point, right, at one point it's either going to break out or break down, and whichever side you are trying to play, you can sort of suffer also lah. So what I will think is that let me go down into weekly, okay? So if you go into weekly, things are a little bit more clearer, because the price is not so fragmented already. So what you have is a very clear consolidation. So what I will consider a higher low is that first, it has to break out. After breakout already, right, it has to come down and consolidate. After it consolidate, it does another breakout. Then this will be a higher low. So if you try to like predict, like for example here, if you try to predict that this is a higher low, and then you go and like buy here while it is still in the consolidation range, right? Then you will get stuck, lor. You'll get stuck, which is what is happening right now lah, because it is still in the trending mode. It has still not opened. It has still not gone out yet. So for example here, right? For example, in this case, you have a low, and then it recover a bit, and then it come back down, go and like stagnant, go up, come back down, stagnant. Then after that, right, when it break out, then we have a very clear, this whole thing is a higher low already, and then you can probably buy here somewhere lah. Then it is much safer. It is much safer. Datang Power HK991, it seems to be consolidating at an upward trend. Okay, let's look at it. But you have to also know that my personal trading style is that I have holding power and I am willing to hold. So I will trade on that bigger frame lah. I will trade on the bigger frame. I will not trade that smaller frame lah, where things are quite hard to predict. So yeah, so that's the difference lah. But if you are someone who like to trade that lower frame, right, then you have to definitely go and find out what is the strategy that work for you also, because there will be definitely people who like to buy here and then sell here, and then when they go down, buy here again, and then sell here again, and they are very happy with it also. So if it works for you, then it's fine lah. But I personally do prefer the bigger range, because let's say if I buy here, right, then I will have to keep looking out for the chart like 24/7. Like I have to keep looking at this counter every day, because like daily movement is very high. But if I go into the bigger frame, then whatever happened here, like this whole thing is consolidation, right? Whatever going on here is not my problem. It's really, I don't need to care lah. So I can just buy and then place my stop loss below, and I can I can just simply leave it there lah. Okay, sorry, let's yeah, that one correct. That one is very busy, very busy. And not only very busy, it is prone to a lot of human error, not in a way that says your strategy works or doesn't work, but sometimes, right, like that time where you can TP, you are having lunch, or you were out, or like handphone no connection, that kind of thing, that your performance can get heavily affected by all these factors. If you have the time to sit at home, trade full time, then it can work lah. It can work. Okay, let's look at Datang Power HK991. Seems to be consolidating at an upward trend. What do they do? Utility electric bill. Power generation, engage in electricity power business, operate through following segment. Power generation, coal. Okay, coal. Hydro power, got hydro power also. I like to look at monthly, not because I trade on the monthly time frame, but if you look at monthly, right, certain level are very like clear cut lah. You use a certain key level immediately will pops up. For example, this level here is very clear the moment you're on it, but when you go daily, right, you can't really see. In fact, when you are on a daily chart, most likely your let me off the moving average. When you see daily, right, most likely your view is like maybe 1 year. Your time frame is only 1 year. So sometimes you have certain levels that were established like for many years in the past that you might not even notice lah. So what I do is I just simply like to go to monthly, and then I will slowly zoom in lah, or slowly go to weekly, and then I'll slowly go to daily. Of course, I don't go into hourly lah. that one to me is a forbidden zone. Hourly is a forbidden zone. So here, right, when you look at it, it seems quite, I would say, quite clear cut in the sense that we have previously like 2012, 2015, and here quite clear cut that this level is constantly being tested, and during 2018 it was rejected lah. It was rejected. So now we are retesting again. And on January it does have a very bullish move, but now in February it seems to be coming down again. So right here alone, right here from the monthly chart alone, you can see that it's a established resistance here lah. Of course, we don't go back to like 10-20 years ago and find out where what was the resistance then, but this level, it was resisted recently at 2019. I mean, it's a major resistance level lah. So maybe this is something that I will have a little concern. So if you want to take this kind of trade, you have to look at from the risk perspective also, perspective. So another thing you need to know is that from here, right, you can see the chart is always like high, low, low, low. So from $11 become $5, then become $3, and then now it's like at 1.5. now currently it's at 1.5 lah. So that's why, right? That's why sometimes, like for example, like most trader, they will see this, they will look at this, and then maybe they might think that, okay, this could be a higher low, this could be a higher low, and then maybe the impatient one will just choke in lah, or maybe the patient one might wait for a bullish candle first, then go in. But regardless, however you see this range here, right? Yes, it is bullish, but when we look at it from a very higher time frame, then you can start to see why this level is getting rejected lah. Why this level is getting rejected. So if you want to make this trade, right, you have to think of the risk and risk reward. So okay, so when I say risk reward, I don't mean like the actual like the risk reward here lah, but what are the kind of other intangible stuff that you are trying to risk also. So first thing is you have a level that is currently being resisted. But let's say if you buy, right? If you buy, you need to understand why you are buying also. And I would think that if you are looking to buy this, right, you believe this one can go up some more, can go up some more. So if we kind of like, let's say we assume that price can break through here, it can go up, right? Then probably the next level will be around $2.50 like that. So that could be your a level that you can use to project your trade. It is used to calculate your risk and everything. So when I put a level there, right, I am not saying that price can confirm go there. Price is confirm going to go there. No, it's not. But we are using this level to see whether if our risk is worth it or not. So at this point, right, if we say that maybe this whole thing is bullish, maybe you might want to put your stop loss here. Or if you are the aggressive kind, you wait, you can enter here and then put your stop loss here. But this one is like super duper aggressive already. This one is super duper aggressive already. Like if you look at this, right, if you look at this kind of entry, right, you are putting up a lot of assumption already. Number one assumption, you are hoping that price can go up. You are hoping that price can go up here. And secondly, you are also hoping that this is the next bottom. So now you are hoping on two things that might that have maybe not a high chance of happening. So I would not say that this kind of trade is a good trade. But let's say if you buy here, and then let's say maybe your stop loss is here, then this one still okay, because at least you are using established support as your trade and as your risk. And if you look at this, right, maybe it might be worth it, maybe it might be worth it, but of course the key thing is whether you can get it or not lah. That one is a different question lah. So because we have all these resistance here lah. Or another way you can go about it is you wait for that bullish move first, and then you place your stop loss here in hope that the bullish move kind of like solidify that this is a bottom ready. But this one is still slightly risky because it can just come back down. It just come back down. Or you can wait for it to break out here. You can wait for it to break out here, and then you place your stop loss here. But if you are going to do that, right, then you might as well buy here, put your stop loss here. I don't know, but this is not the kind of trade that I will want to make, mainly because of the fact that we have a lot of resistance, a lot of resistance, and perhaps waiting for it to consolidate and go up and put your stop loss here might be a better play, because at least it is telling you that okay, we have another higher low ready and price is going up, and you will not end up in a situation where you enter here and then things just get resisted long term and things just drop, and then you still like get hit with the stop loss anyway lah. So yeah, so that's my personal opinion lah. The important thing is to always look at the higher time frame first. Always try to look at higher time frame to see if there are any very super clear and obvious resistance level or not. Because right now, the moment I go into monthly, right, there is one very clear level here, very clear level here. Oh wow, we have 21 people more than yesterday. So we are currently at 10 p.m. ready. Very close to US market open. The futures are doing quite okay. Futures are doing quite okay. But it's very funny though. For example, if you look at this, right? If I see any chart that is like this, it wouldn't scream anything bad. But because I personally have overexposed to tech sector during the end of 2020, and not only that, there were a lot of bad decisions that I personally made. It's my own decision that I own self lah, like all the PayPal, I double down all those, which caused the situation to seems much worse than it is, and also of course my overexposure to all the tech stuff lah. So but if you remove all those, it doesn't seem so bad yet. It doesn't seem so bad yet. Hong Kong is definitely doing very well, very well. So yeah, so for Hong Kong, right? My Hong Kong play will be to buy this lah. But not now, not now lah. But I'll be taking a close look at this, because this is heavily geared toward tech, and I mean Hong Kong tech. And I think because of all the rate slashing, right? I mean, maybe it does give Hong Kong the boost that it desperately needs lah, because it has been coming down for so long already. Hong Kong has been downtrend since almost 1 year. You know, this was like February, like Chinese New Year period, like after February, like all the ampang gift ready, then just dive all the way down. It has been down for 1 year already lah. So I think it does need like any form of catalyst, anything to sort of give it a boost. And I think this rate slash, whether or not is it truly causing the market to rise, it is a question mark. It is a huge contributing factor, but there are definitely other things also. And I'm also wondering maybe if since the US tech is like doing quite bad, will the fund from all the US tech, will they flow into Hong Kong tech or not? So that's one question. I mean, if it does happen, right, then we could see Hong Kong, the index as a whole, it can recover lah. Despite how Hong Kong try to make their index as versatile as possible, right? You will notice that Hong Kong HSI is quite heavy on tech also. If I were to kind of like overlap these two, like here, right, this is February also. I think let's just compare Hong Kong. Wait, I'm comparing Hong Kong to Tencent, sorry. Lion. Okay. Yeah, so is very, it's quite matching lah. It's quite matching if you look at how things are falling. So the blue color line is like Lion OCBC, slightly more of course 100% tech lah. I think it's 100% tech, but Hong Kong is still falling nonetheless. Yes, Tencent is a very huge component of Hong Kong, but recently Tencent was doing quite well. Tencent actually recover a bit, I think. Just now we were looking at it. Yeah, it does recover 3%, 4%, but that's the thing about Tencent and majority of the Hong Kong counter also, is that like when they go into ranging mode, right? When they go into this ranging mode, the range is quite big. The range is actually quite big, like from the bottom to the top, right? It's 22%. This whole range is like 22%. So it's a very, very big range. And so sometimes if you see a counter go up like 4-5%, right? You would think that it is like one big green candle, but if you look at Tencent, it's like huh? Like you can't really differentiate this from any other green candle or what lah. So it is Hong Kong stock does have this characteristic that which I don't really like, because it's too swingy for me. It's too swingy for me. But those like to buy the bottom and short the top, I think this kind of behavior is definitely very good lah. You can make a lot of plays. And even for Hong Kong, if we look at the 100 moving average, right? It does go up and down around this moving average quite often lah. So if you decide to like maybe short here, right, you can definitely be like quite sure that yes, it can break down, or even if you short like maybe here, right, it can go down a bit lah. So it does stay below for quite some time, then it does stay above for quite some time, which is very different from Dow Jones or Nasdaq, where it is often above the moving average most of the time. So if you try to short this, right, most likely you are not going to be very successful but for Hong Kong it's still quite okay. For Hong Kong, you can definitely try to like short the top where you might think that okay, this one maybe want to go down now, or you can try to buy the bottom. Okay, this one can go up, and even here, if you try to buy, I think still some profit before the whole thing start to come back down again. Let's look at how US is doing. Still quite yeah, I mean pre-market, so wouldn't expect very big movement. How's the yield doing? The yield is negative. How's the VIX doing? VIX is still somewhat okay. Yeah, I tend to look at VIX also, and recently I'm looking at France, the France index. If you have CMC, right, you can probably trade this also. Is surprisingly resilient, And in fact, right, if you guys not noticed recently, there's one counter that is doing sorry, not one counter, but one industry that is doing quite well, and that is the luxury industry. Like you have things like all the Richmond, Burberry, Hourglass, all this, they are they are retaining their price very well. They are retaining their price very well. All these consumer luxury lah. Excuse me. US index. US recently have been very strong also. Currently, US dollar quite strong also. Gold continue to go up. Bitcoin is still at the support, way back at the support. Hong Kong going to break like 800 really. It's been a while. It's been a while that we see such a 3-4% rally within a day. DocuSign. Let's look at all the pre-market. DocuSign is really this one really very scary. Really very scary. Zoom also very scary. It reminds me of things like Top Glove and MacTech. Top Glove. Like this is a very strong COVID themed counter also, but after that, like the world got used to it, right? Then they it just die out lah. It just die out. I think this kind of counter are like one hit wonder, in the sense that because COVID was so sudden, like not really expected, the world wasn't ready for it, and there was a sudden surge of demand for this kind of company, right? Be it Top Glove or be it Zoom, like suddenly there's a huge demand for it, right? Definitely these companies, what they want to do is they want to meet these demands, and in order for them to meet these demands, right, they need to up their manufacturing capacity. So maybe for Top Glove, like a few more glove making machine, buy more rubber, or for things like Zoom, right, maybe they want to upgrade their server, make sure that they can handle all the volumes that are coming in. So during that very short, unexpected period, they need to spend a lot of money to meet this short-term demand. But once they spend all the money, right, then once COVID-19 subside, or once the world is like gearing up and we have all the vaccine now, we have enough hospital, we have enough all the supplies, and things start to normalize, then whatever capital or money that these counters spend to increase their manufacturing capacity or what, right, it's like being wasted. Yes, you spend so much to meet this one-time short-term demand, right? But now that cannot be converted into growth. You cannot keep expanding already, because now no one wants no one wants your product already. It's just get stagnant there. So during that period, I believe everyone just like happy lah, very happy in the sense that wow, there's a lot of growth, like everyone keep buying, but after that, like everyone realized that, like, is it really is it really gonna grow? It's quite hard to justify, like, it's quite hard to justify the so-called growth, like, and most likely people realize that yes, we probably overextended lah. So if you catch it during this period, like, definitely win. But of course, if you did not catch it and you want to, like, hoping that it can go up to the previous high, or you hope that the magic can happen again, is is quite a hard thing lah, and sometimes, right, this kind of thing is just come and go. And if you were to look back at this chart maybe 5-6 years later, or when COVID-19 is like underneath the carpet already, hidden within the history already, right, you might not even know what happened here. Like, what like did something happen here? Then maybe you need to go and Google a bit what happened in 2020. Then, oh, like COVID. But even then, you might need to dig a little bit deeper, because right now it's very obvious we can make that connection, but maybe the next generation might not be able to make that connection. So the key thing here is that this story here is that you have to know, sometime when a company make a high, right, there is a reason why they make a high, and there is also a reason why they come back down, and whatever that caused them to make that high is probably no longer valid. So we cannot always think with the idea that it used to be $3, so maybe it can go back to $3, and most likely it won't. Most likely it won't, because times have changed already. Certain things that cause it to be valuable at $3 is no longer there. All these signs are gone. So in fact, if I were to compare two counter, right? If I were to compare two counter, one used to be at $10, one used to be at $10, and then now it is like at $5. So most of the time, because people know that it used to be a $10 before, they will have this mindset, they will have this thinking that, hey, maybe can go back $10 again. Like it was $10 in the past. Wow, why cannot go back? And then, like, whenever it dropped down some more, right? Whenever this dropped to 250, then people will be like, hey, used to be $5 less. So they always think in that mindset, and hoping that it can, whatever the counter is, it can regain the previous glory days lah. But from my personal experience, if something used to be $5 and it is 2.5 now, right? It's very hard for it to go back to $5 again. But if something is at $2.5 and it never reached $5 before, right? There's a good chance that there's a higher chance that this one has a bigger probability of hitting $5 than this one, because maybe this one has some growth area that we have not explored yet. Then it can take advantage of it. But for the previous case, it is like whatever caused it to grow is no longer there already, and we simply cannot go back. This kind of situation fall into a lot of big name counters that have fallen from their grace. Things like Semcorp, Marine, Keppel, SIA. Yes, correct. The one who bought $5 cannot wait to sell. But I can tell you, if it goes to $5, right, most likely they might not sell, they might hang on to hope that I think can go back to $10. Because in my newbie days, right, in my newbie days, it happens like I buy something, I make a reckless trade, and then this trade fall, and then it go below my stop loss, but I scared to cut the loss. Then I from trader become investor, those kind back in my newbie days lah. Then when the counter suddenly rebound very sharply, right? Like give me one last chance to get out at break even, or maybe at that time I was holding a paper loss of $2,000, and then now maybe it back out, right? I can get out with a paper loss of $200, but instead what I did was, it like go up already, like confirm something happening, then I hold. Then end up the whole thing go back down, and I end up cutting loss at 2,000 again. Yeah, it's very scary. It's very scary. I can tell you that first step, that you take, where, for example, let's say you make a trade, okay? Let's say you're a trader lah. You make a trade, thing going up, then this is your stop loss, everything is nice, and then it comes down and hit the stop loss. But the very first time that you decide not to cut, you want to hang on for whatever reason, or worse yet, you double down, that is the start of your investing career already. That is the start of your investing career. You at one point like shifted from trader to investor already. And this is very real, because like it drops some more, right? Then you average down some more, then average down some more, then at one point you simply just cannot take it already. So this is like the, hey, hello Marcus. You are here. Yeah, so this is like the stock version of the Martingale strategy lah. Those Martingale gambler go and like double their bet after every loss, thinking that like, 50-50 at some point, if it like 6 times lose already, at one point you have to win lah, because it's a 50-50 chance. But like I mean, things does not turn out well lah. Things does not turn out well, and it only takes one time for you to kind of like break your trading rules, one time for you to break your stop loss discipline, and that one time is enough for you to just kick you out of the whole trading journey altogether. And this is very scary, because I know a lot of friends who keep asking me about Lemonade and Palantir. I know a lot of friends who keep asking me about Lemonade and Palantir, and these are two counters that I don't really like. In fact, I have a watch list that says shits, and I have these two counters there, Palantir and Snowflake. And the only reason why I know about Palantir is because at one point I was very bored, and I was looking at TikTok. And when I was looking at TikTok, right, naturally, like all the investing stuff catch my attention lah. So as I look through more of these investing stuff, a lot more investing stuff come out, and there was at one point like non-stop everything Palantir. Then whoever the person that is trying to promote Maybe lah, maybe one day we see how. I don't want a shot and then some company come and buy out, and then then the whole thing the whole thing goes up, I don't know where. Yeah, so as I was saying, right, so a lot of people that are like kind of praising or want to like promote, not really promote lah. I think they are just sharing lah. I don't believe they are like promoting, like I don't know, but they are just sharing, and I think they often get overexcited. And this is a very good example of what I mentioned just now, also in the sense that just because something was at $50, $40, it doesn't mean it's going to happen. Of course, maybe over like maybe the 5 year, 10 year later, this whole thing can like that consolidate and then suddenly become like GameStop, that style lah. It can happen lah, but the thing is, you have to hold until that happen lor. You have to hold until that kind of stuff happen lor. And let's say if you are a trader that is very young, just start out, or let's say if you do not really have a lot of capital for trading, and let's say you have like 10k 20k, and then within your first trade you decide to throw like 10k into Palantir because you heard that it's like going to the moon, like going to be $100 $200, and you will think that, oh, 10k can become 100k, you throw inside, and the moment it break the support, and the moment you decide not to cut, right, your 10k is stuck here until like some miracle happens lah. And that kind of money is very, especially when you start your investing journey or trading journey, right, that seed money is very valuable. It is worth more than 10k. And if you kind of like take the action to cut the loss, right, maybe you end up from 10k you left like 7k, and that 7k is still worth a lot. That 7k is still worth a lot. You can do a lot of things with it, but sometimes it just got stuck there lah. Even on investing note, I saw quite a lot of people averaging this down. Let's take a look. Palantir. Sorry, not make a post. Search. Palantir tab. Palantir, this one is what? This one 11 hours ago. Actually, he quite active one. I always see him one. Palantir day lower trend line, MACD bearish. Okay, this is me. Palantir Forsaken counter never vested here. Oh, good thing. Palantir, good fortune to Panjang. What's Panjang? You don't know Palantir. Most investors in Palantir don't even know what they do. Okay, that's true. Let's change that with this comprehensive look into the secretive company is business. Okay, so Palantir actually have some similarity with one of our Singapore counter. Singapore counter, they are like very secretive. They are like tech counter, but very super duper secretive. They involve in some kind of, I don't know, data analytic, data gathering, that kind of stuff, but it's like government related and very secretive, that kind of thing. You can guess what's that counter? I think venture. Panjamin Long. Hey, hello, Megan. Venture is a very secretive company also. They don't really know what they are doing also. But at least I believe venture not as bad as Palantir lah, because Palantir was really super duper hyped up by a lot of people, a lot of companies. But venture so far still okay. I mean, that I think during this period, it was when venture was added into the Straits Times Index, and it was a good move. I really believe that it was a good move, because Straits Times Index desperately need some form of variety. On the Straits Times Index, we either have banks or we have all the REITs. It's like filled with either REITs or bank, and then we have like those chapalang counters that doesn't really have a lot of weightage lah. They are just there for the sake of variety, you know, like I mean, don't want to sound racist, but it's like you have that one Indian kid in your group just so that it is like racial harmony, you know, that kind of thing. But the entire index really need something that is not bank and not REITs lah. And I thought venture in straight time index was quite a good move. But after that, right, it's very hard to do any kind of fundamental analysis on this counter because they are very secretive in their business lah. They are quite secretive in their business, and technical analysis, like still okay. Like I don't want to get stuck here. I don't really want to get stuck here. Let's continue to look at. Hey, wait. What's the time already? 10:23 already. Index. Okay, let's come back here maybe another 10 minutes later. Cathy Wood sold Tesla and Palantir. This is crazy. December 17. Decide to change my name to Laman. On punt on other two tire continue. Nvidia mainly low up. Tesco top 5 stop by in December. What, he really anti Palantir like? This counter suck, much high, keep on losing. I mean, I'm also anti Palantir, but at some point, I mean, you guys will know I also have too long position because I mean the technical does agree with like long position. I mean, we give it a chance lah. We give it a chance, but since both of our chance get denied, then we don't trade already lah. Trading View also recommends strong sell December 8. 7 December US market, blah blah blah. Okay, this one too long already. To be or not to be, year to date, I'm suffering about 100K loss. Oh my god, across all portfolio, mostly due to China's stock. Yeah, China was very chalala. I think a lot of my friends who are in China counter during the end of 2020, early 2021, they suffer very bad also. But hopefully this current recovery can give them some encouragement, give them some motivation lah. And looking back at my own personal portfolio, this one just to let you guys. I mean, I will always share. I will always be very frank and share. Like currently at -7 already, mainly because of the past this week sell off lah. This week sell off was still quite bad. 7% already because I do have I still have Nvidia, and on Singapore side, Franken and Grand Venture are like dropping also. So my over exposure to the tech and electronic sector is really hurting quite bad. But on the good side, I have profited quite a while back in previously. I mean, my Grand Venture and my Frankens are not my first entry lah. They are like the third or fourth entry ready. So even if they hit the stop loss, right, I will still be overall profit on those counter. But regardless, I mean, we were not able to profit on that trade lah. To me, even though it's still green overall, right, to me it's still money loss lah. It's still money loss because at one point they were like positive 3,000, 4,000, but now they are like maybe going to like 1,000 like that. So to me, I still consider it as a money loss. But the thing that I want to kind of share is that like from November until now, right, I made a few mistakes that I shouldn't make. And it's something that I tell you guys not to do, but I own self do lah. Like don't double down. I double down, and I double down on PayPal, and I entered Nvidia. I entered Nvidia when there wasn't any trade set up to enter, and because of that, and along with overexposure to the semiconductor sector, right, I actually, like from my top, I lost about close to 20% already. My drawdown is very close to 20%. But of course, with regards to my personal strategy, right, 20% is quite beyond my what my normal strategy, like so-called the maximum range lah. Because most of my drawdown, if I follow everything, do everything properly, right, I will lose about 6-7 trade in a row. And if each trade is like 2%, right, I'll probably only lose up to like maybe 14% before things start to recover. But now I'm losing close to 20%. And this 20% is really because of all the additional stuff that I shouldn't be doing. And of course, when I do that, when I make those decisions, it was with the hope. It was always because of, it was always with the hope that market continue to be bullish, and I can skyrocket my profit. But trading is like that. When you, that one time where you decide to break the rule, the market will go against you. It's always like that. And even though I could have prevented those, right, the key thing is, because I follow my risk management, my stop loss very, very strictly, that I'm still in the market. I'm currently still in the market. Imagine if you make like 5%, you take like 5% risk, 6% risk, and then imagine if you are on a CFD. If I'm on a CFD, I'll probably have like 30, 40 positions. And this period can really like kick someone out of the market. And that's why I always say that, for you to be a true full-fledged trader, right, like in order to know that you can survive all the market, all the unexpected things that the market has for you, right, you really need to survive through this period, and you really need to come back up profitable. And that's how you will know that, hey, okay, like I survived the worst already. My strategy is robust enough that even if I make several mistakes, I'm still alive, I'm still in the game, I'm not out of the market. Because no matter what we do, right, we cannot avoid the drawdown period. We cannot avoid when the market is starting to like retrace, because we will always be caught in that transition period. Same thing for market recovery also. Same thing for market recovery is when sometimes when the scanner start to, like during market bad, right, scanner always very empty. But sometimes when market start to recover, the scanner will start to show counter quite often. Like maybe I'm hoping now that in the next 1-2 weeks, Hong Kong scanner will be slightly more populated because Hong Kong scanner have been empty for so long. Hong Kong scanner had been empty for so long. And then and if the things start to show, if things are well, right, definitely we can start to look at Hong Kong already also. And sometimes when you buy certain counters like before the market recover, right, and sometimes when they start to recover, you can recover also. So the transition go both ways. The transition go both ways in the sense that you can be like, the market is here, everything very, where's S&P? Okay, like the market is here, and because like you expect things to remain bullish, of course, if things bullish, of course you will continue to buy. You're not going to just like preemptively stay out of the market or what. But imagine buy, but end up things get, and then you get your drawdown here, you cannot cut with your drawdown here. But when things start to improve, you buy, right, then these are the counters that will sort of like go and hit profit level also. Are there traders who pure shorties? Do they do well? Okay, pure shorties, right? You call it the the perma bears, the perma bears. Pure shorties is a very, I'm sure they are out there. But I personally believe it's not a viable strategy, in a sense that you only need to get hurt one time. And your account can be gone. It is like you are trying. It's like driving a car without an airbag. Because you only need to get into one accident, and that one accident can be maybe 0.1% chance or maybe 1% chance, but you only need to kena that one time, and you are gone. And that can be things like whatever you are shorting, you can get, that counter can get suspended. or whatever you are shorting, it can suddenly get buy out by another company, for example, like recently Blizzard, Activision Blizzard, and those kind of thing can immediately throw you out of your strategy, because if you keep shorting for a long period of time, these are the things that you will eventually encounter. And the moment you encounter them one time, right, especially getting your counter suspended, getting your short counter suspended, right, is a it's hard to recover from. I think you sometimes, maybe depending on situation to situation, you can, like, the brokerage can sort of let you liquidate, but most of the time you might not get to liquidate also, and now you owe that short to the stock that you borrow, you owe it to someone else, and now you cannot return that. So there's a lot of regulatory issue that is going to come in, and you only need to kena one time to end your trading career. But if you just play long, right, the stop loss is there to help you, and you don't have all these funny things that you are going to get stuck with lah. And it's very easy to see that, like, when the market is going down, yes, of course you want to short, and it's easy to look at counters like Palantir and say, hey, if I short that, I will definitely make money. But similarly, for every other bullish counter also, if I look at Apple, I can also say that if I bought here, I'll definitely make money. If I bought here, I will definitely make money. And since you have that option of playing long position where your career won't be end by something out of your control, because at least for long position, if you choose to hold beyond your stop loss, if you choose to double down, if you choose to take 5% risk, 10% risk, right, then that loss is on you. That is your decision. But let's say you have a very good short position, you are earning like big bucks, and suddenly that counter get suspended, right? That profit is gone. That profit you have been holding is gone, and whatever margin that you put in, you might not get it back. Also, is totally gone, and you have all the short interest that are coming in, and that short interest is not cheap as if you are going to hold for a long period of time. So not only you have additional cost in terms of short interest, right, you also have risk that is nothing you can do about it. No stop loss is going to save you from a suspended counter. No stop loss is going to save you from a very big gap up due to a privatization. Yes, you have muddy water, you have things like Iceberg Research, who did a short selling on a lot of counters. But eventually, right, for example, Nobel is now suspended already. And these research institute are very professional. They probably know when to get out. And they are not like us, they are not like us with a CFD account shorting like that. No, they are not those kind of, okay. They probably have all the credit, the default swap and all the bond swap, all these kind of thing to short that counter, which do not carry the same risk as shorting counter on the CFD. So shorting is really something that I don't encourage. I don't encourage, mainly because of the fact that your career can just end by something that is outside your control, and by something that you have no way to defend against. You can just one day you wake up and and your entire green position is gone, and you can't get your money back, and that's quite scary lah. And I'm not like scaring or what. It happens to people I know before. I don't know how many of you were trading like back, like very long time ago, when OSIM was listed. Right, during this period, I think OSIM from $2 dropped to like maybe very low, extremely low. And then there were a lot of happy shorties, a lot of happy shorties. In fact, Donovan Ang also called a short position on it during that period. I think 2015-14, I don't know lah, very long time ago. And a lot of shorties very happy. Then during one day, out of the blue, they get privatized for $2, I believe. And all the shorties suddenly one day wake up, like one day the profit position is like a few $1,000, then next day wake up entirely gone. And this kind of thing, right? You have no chance to respond to it. It just out of the blue lah. So it's very scary. It's truly very scary. Things market open already. Slow, but hopefully it can maintain lah. Hopefully it can maintain. Even muddy water also. Muddy water back when they have the report on Olam. When Muddy had a report on Olam. Like here, somewhere here. The whole muddy water saga, and then suddenly Temasek saved the day. Temasek saved the day. Yeah, Ford is down 2%. Ford has it was worse. It was worse. I think it was worse. Where is it? The entry was here. The entry was here. So this one still all right. I'll personally just leave it there lah. Still all right. Good to see this one recovering also. Marvel just now was Marvel also. One thing I noticed, AMD like a bit funny. Patreon. No, not this. Hot take. Oh, Micron went down also. Taiwan 7. Just now they were doing quite okay during the pre-market. But after that, they said, and Nvidia was Nvidia also. I think the entire tech are still selling off lah. The semicon stuff are still selling off. But this is really disappointing though. This one was very like, I mean, we don't have lah. We don't have. It's just that the earnings was very positive, but end up still. Microsoft. Yeah, hopefully we get a break today lah. We get a break today. Apple still all right. I think for Apple, Microsoft, and Google, right? This one was a bit expected. I think in my video, I explained why the stop loss level are there and why this movement here is quite possible lah. But in when we are looking at it from another perspective, the fact that these three counters still hanging around quite better than the rest lah, quite better than the rest. So one of the Home Depot, you mean now today? Ford recovering. Yeah, Home Depot also dropped quite a bit, but I think this one, our entry was here, so about like this lah, about like this. Still, I'm a little bit more worried for Costco. I'm a little bit more worried for Costco. Home Depot is still quite good. I think that's why I was saying that for US, right, it is not just the tech. Almost everything is dropping, regardless of whatever sector that they are in. Let's look at Home Depot. Yeah, still quite okay lah. Still quite okay. Zim is what? Zim integrator. So for example, it is quite important to stick to the Zim shipping. Let's look at Zim shipping. Zim integrated shipping. Why so lag? Sorry, very laggy. What's this? Oh, ASML. Oh, Zim is strong. Shipping counter, transportation. Excuse me. Oh yeah, this one I remember. We used to have a trade setup in the past. Finally remember. Personally, I will want S&P to be here until I will be like, oh, okay, like the retracement is over. If it's still like hanging here, I'm a bit a bit worried lah, a bit worried lah, a bit. I mean, as a trader, right? This kind of thing, it's good to share with you guys also, in a sense that normally, because when we look at traders, right, or I don't know how I am appearing to you guys. For example, I say that I'm profitable for the past 6 years, 7 years, right? But what you will might not realize is that I will go through this fearful period also. I will definitely go through this fearful period. I'm not like totally lack of emotion robot sitting there like not doing anything. But despite all the fearfulness, right? Despite all the fearfulness, one thing that I really I will say I'm really good at is I stick to my rule. No matter how fearful I am, I stick to my rule. And over the period of like 1-2 years, right, it have come to the point that I'm kind of like used to it already, used to it in a sense that when this kind of thing happen, I'm like, like here we go again. But at the same time, I will be fearful because no matter what, no matter you profitable trader or not profitable trader, no matter who you are, you definitely do not want to lose money lah. Like when I see my portfolio, right? When I see my portfolio, at one point my what is it on there? At one point my open profit at one point my open profit, it was like at one point my open profit was like 15,000. It was like 15,000, and I saw that 15,000 drop to like drop to like now minus 39, and it does affect mentally lah. It does affect mentally, but because I have been through that scenario many times where I see positive 1,000 drop to like, I mean, open position lah. So the current position that I'm holding, and I can tell you that most of the time, right, my open position, it is usually like quite always like neutral or negative one. It is often very rare that it goes into such a very high positive mode, because once it hit the levels, right, I will start to take the profit, and then the open position will back to like, it will drop back to very low, that kind of thing. So but it is very heartbreaking to see 15,000 in a big open position suddenly become so low. But on the other hand, I also understand that the only reason why my open position was so big, 15,000, is because at one point I overexposed myself to the tech sector, the semicon sector, which everything was going up and up. I was like having 4 or 5 different counters trades on that sector alone, and somehow they start to drop and they start to didn't do well. So yeah, so as I was saying, while it is while I'm still profitable overall over the years, right? I do go through this kind of like period where I will like not I'll feel a little bit disappointed, down. It's like I'll always feel I'll also tend to feel like, yeah, why like that? Why that one time I decide to double down, this kind of thing happen. And every time when I tell myself, okay, I will stick to my plan, the market always go up, always go up. And then after that, okay, maybe why not I bend the rule this one time and then market start to drop. And yeah, but of course, overall, you don't break all the rule at once lah. You don't break all the rule at once. Before you break the rule, you have to know why the rules are there in the first place. And like you don't suddenly 2% change to 5% risk and then suddenly go and double down and then suddenly enter all the company from the same sector. And the moment you do that, right, it only need to happen once and you are out of the market lah. Like the market need to go against you once. 37, 40. Okay lah. Okay lah. So far so good. So far so good. At least at least Marvel back to positive. Fought back to okay. Fought back to okay. So these are okay. These are the kind of thing, right? It doesn't affect me. It doesn't affect me how suddenly come down and get up, because I can tell you, right, most of the time I don't look at my portfolio or my open position. I always look at the chart. I always look at the chart. So I don't see the number there. But whenever I see the number there, right, it's usually off the market hour and I'm not prone to doing stupid things. So that's how I always keep myself like very disciplined, because I don't look at my portfolio as I trade. I look at the charts. And what you will see here is these are live price also lah, because I bought the live price data, and sometimes I will place my TP position here and there. So for example, in this case, right, previously when price was like somewhere around here, I will place my alert here lah. I will simply place my alert there. And then when price start to come down, I will start to place my alert and my stop loss level, that kind of thing. But now I have a separate I have a separate trading view account for my own personal trading, mainly because this trading view account, right, I have to like all the charts and all the levels, right, I cannot keep them on my trading view, because when I go through with you guys and when I go through certain things with you guys, right, sometimes I need to draw here, draw there, and then all the levels, all the alert, they kind of like mess things up. And then so I decide to have a separate personal trading account to maintain my manage my own trades. So I use TradingView to manage all my trades. And previously I managed them here also. Previously I managed them here also. Is it my position? I might have cleared it already. Yeah, previously I managed my trade stuff here also. Sometimes you can see there are like certain colors. They did this color. They are very good. They are very good to make use. Mainly for me lah, because I use scanner. I use the scanner. So sometimes if certain counters that I'm holding like 10 years ago, like for example, I'm still holding Tesla. And if let's say Tesla shows, let me add Tesla. I'm still holding Tesla, and let's say I just put Tesla like pink color, and if Tesla shows up on the US scanner, right, it will have a pink color code here. So immediately when I look at the scanner, right, I just go for things that have color coded or not. If it's color coded, right, then it tells me that okay, I used to have this trade, I have profit before, and then now it is on the scanner again, so I'm going to make a second trade. So this is how I do all this thing lah, and how I manage all my trades. But now it's too much. This account has too much stuff already, so I stopped managing here. Marvel recover a bit, but I'm still a bit. So for those who come to my course, they have the actual scanner criteria lah. They have the actual scanners criteria. So they do the scanning on their own, and then I teach them how to do the proper tracking. So there's a lot of soft skill teaching lah, how to manage your trades, how to manage your discipline properly, all this kind of stuff. So there's like 50% of it is strategy, which I truly believe that a true trader strategy will only help you that 50%, but the other 50% come from how you manage your trade. I call it trade management, like how you ensure that you are keeping track of your trade, how you ensure your profit level, TP level, all these are properly recorded, trade journal management, all this kind of stuff. So these are the other 50% that I try to teach as much as I can, because currently out there in the market, I don't think anyone teach those stuff lah. Because the reason why no one teach those stuff is because no one want to learn those stuff. Also, a lot of traders are truly focused on strategy lah. Because it is quite a common misconception that strategy is all you need, but in fact, not really. Hot takes. Okay. I think the last thing I want to say is I go to bed, then morning wake up like that. Wow, that one can cry. That one can cry. Yeah, I was saying I'm a bit disappointed with AMD. So AMD and obviously on a daily basis, we will have this kind of how to say this kind of divergence lah, where two of the same counters, one is like positive 1%, the other one is like negative 2%. But I mean, just saying I think this is very normal. It is just often that usually you will see either all of them green or all of them red. You don't see this much disparity lah. Intel is also like not the company, but this kind of chart, right? I don't like to trade this kind of chart, mainly because too much gap already, and a lot of false positive rally, like you see here, and then suddenly scare you and then go up, and then like going well, then next day gap down. A lot of gap on their earning. Every time earning, there's always big gap, and it's been ranging lah. It's been ranging for so long. So regardless of whatever the company is, right, the moment I see this chart pattern, I don't trade this kind of chart pattern, because a lot of people tend to ask me, hey Zo, why don't you look at Intel? Because since we always talk about Nvidia and AMD, right, why not Intel? And yeah, I think this is the reason why I like a clean chart that doesn't scare people. like you see here, it gaps up and then suddenly like come down, and here break the resistance, then next day jump down. So try to avoid. Don't worry, Marcus, bro. Don't worry. Slow and steady, lah. Slow and steady. I mean, the whole structure of my course is to be slow and steady, because right, what I do is I guide you through the whole market process, like in a way where right now you will see market is like bearish, like I'm making losses, like almost everyone is making losses, like everything very bad. But what I do in my trading course is to make you go through that period, and I will like really one-to-one guide you, and I want you to experience that drawdown and that recovery. And the moment you experience that, right, by yourself, with my guidance, then you will be confident and comfortable for life already. You know that you make it once, you are good to go already. And that is where I would say most of my trainee graduate, and they are like Zo, I don't need you already. So when they don't need me, right, I'm also very happy. Because it's like I did my job well, and number two, I don't have to babysit them anymore lah. I don't have to babysit them anymore. In fact, most of them who to graduate. Some of them, when they are free, they will come to my webinar time to time, or sometimes even when I let me see if any of them here. Let me see. None of them is here, but maybe my future trainees are here lah. I think some of my like Marcus lah. Yeah, but there are some other future trainee here also. Yeah, so whenever I do all these webinar or what, right? Even though like I I offer them like, hey, you all just come lah. Like they don't come already because they don't need to listen to me already. They know what they have to do. And even for now, right? Even for now, some of them managed to get the Canadian. Some of them have rumbers. Some of them have rumbers from I think they enter from here and then now after that I don't know lah. I think they probably like either TP or either break even or somewhere lah. Then some of them have the Canadian natural resource. Canadian natural resources. This one came out on the scanner last week or last 2 weeks ago, and it's like it's like they going this kind of thing. They never show one. They never like. It's not like I'm entering this like they own self enter and then like own self don't know do their own thing. Wait, let me go and find my scanner. So because one of the key thing that I teach is also like after they get the scanner ready, right? I will show them, okay, these are how I pick out what counter to enter from the scanner. But of course, like personally for me, I have my own bias. I have my own bias in the sense that maybe there are certain charts that I prefer, but overall it still meet the entry criteria lah. But there are certain kind of charts that I prefer. There are certain kind of industry that I prefer. So for some of them, they will enter certain industry that I normally would not enter. So like overall, we have a very good mixture, and sometimes it is good to see how we share each other trade, and sometimes I do learn a bit from what they do also, in a sense that they will enter certain counters that I wouldn't enter, and then they end up with a profit. Then I was like, oh wow, okay, then maybe in the future I should take note of that also. So it's always like a group learning, like it's always like a very good learning. Where's my scanner? Oh yeah, sorry, I got two screens. Let me bring out my scanner. What is citizenship doing? Citizenship financial growth. Hey, where is it? Hey. This one is down 1.16%. The bank are coming down also. Some of them managed to get first resources also. They're Canadian natural resources. So with during this day, right, among these 6 counters, there were 3 counters that sort of meet our criteria to enter, and Canadian natural resources was one of them. But some of them enter Canadian, but I choose to enter Key Corp. But I mean both did well lah. But I think those that enter this probably doing better now lah. Let's look at how Key Corp is doing. Oh, Home Depot green ready. Still not green, but why still red? Oh, it's red because it's lower than the opening price. Okay, Key Corp still maintaining well. First time in a very long while to see a green list here lah. Ford's recovering. How about General Motors? General Motors recovering. Okay. Like so far so good lah. So far so good. Microsoft. So for Microsoft, I'm not sure if everyone here are those who were here yesterday also, because I don't want to repeat the same thing lah. But just for for fear of repeating again, right? I'll just share lah. Is that Microsoft recent buying out of Activision Blizzard. So personally, I'm a gamer. I like to play game during my free time from young, and like this kind of things, right? Stock market and game, when they coincide, is I find it very interesting. Is like my two passion coming together. And I can tell you that gaming have come a very long way. Gaming is like no longer you go and scold your kids for playing game and then you buy like the Nintendo cartridge. Gaming industry have actually come a very long way, and there's like professional gamers, kids who are like 16, 17, earning a few millions, like in Dota 2 competition. So if you go and find, if you have kids, right, go and ask your kids if they play Dota 2 or not. If they play, let them play lah, let them play, let them enjoy. Who knows, they can be a professional player and they will end up making making a few millions. And if you look at Dota 2, the game, right, they actually have like their own version of World Cup, where it happens once every year, where all the players from all over the world, they will compete in the stage. And the stage is very big, you know. It's like there's a lot of spectator lah. Of course, during COVID-19, the beauty of gaming is that when come to COVID-19, they are still able to hold this kind of event because everything is online. It's like the new metaverse. Who knows, next time we have a metaverse where we can view gaming competition in a metaverse. You know, we are like we are still sitting at our home, but they have like a virtual stadium, that kind of thing. Who knows now? Who knows? So that kind of separate from like footballs or other kind of sports where like basketball, all this, where I think it has its own niche lah. And in fact, for Dota, right, in 2013, they have their third World Cup, so-called the third World Cup. And the prize money, right, for the first time, the prize money went above 1 million. So during 2011, when they have the first World Cup, the price was like maybe a few $100,000. It was like you will find gaming professional gaming prize money around a few $100,000. That's very normal. That's very normal because like even back in like 2007, 2008, we have all these gaming competition where they give out like a few $1,000s, a few like 10,000 is prize money, is unheard of. But in 2013, it actually broke the 1 million benchmark. And now, right now we are in 2022, and every year from 2013 to 2022, right, the prize money went up. It was like maybe 1.6 million, and now at one point, right, I think it's over 22 million or somewhere there already. And it is a very big industry. It's an extremely big industry. And given how Microsoft is already well established in the gaming industry, right? They are the owner of Xbox. So for those who doesn't know, you have Sony, PlayStation, and Xbox. So they are like each other rival lah. But Xbox have always been the so-called the second choice lah. So I don't know if there's any Xbox fans here. I'm personally a Sony fan. I used to buy all the PlayStation, but now no more lah. Now no more. But now because Microsoft, they have bought over Activision Blizzard, right? Who Activision Blizzard is actually the owner of a lot of very popular games with like this Dota level of prize money, all this kind of thing, right? And that's one of the reason why I think in terms of the gaming and the metaverse and all this, right? Microsoft is like really on the ball already, and that's one of the reason why Sony share price dropped by so much after this news come out. So if you look at Sony, like when the buy over news come out, it was like dropped this much. Very scary, very scary. So in terms of a general fundamental perspective, right, I think Microsoft is definitely ahead in terms of like if you consider tech, right, I think Microsoft is one of the company whose the tech that they have is like 有料的啦，可以赚钱的，不是那种像 Palantir 这样不懂在做什么。I don't know what's going on. Don't know what they are doing also, but they already have a lot of profitable business in place already lah. It is not those tech companies that is still growing, not profitable yet, but hopefully they get profitable in the future. But for Microsoft, they are like really I would say on the ball already lah, on the ball already. But of course, like even with all that, as traders, right, you have to really ensure that you separate your mindset as a trader and an investor lah, because as trader, what we are doing is when we buy Microsoft as a trader, we are throwing in one big sum money here and we hope that it goes up and then we take profit with that profit. But when as an investor, the gameplay is a little bit different. You are not going to throw your entire big sum here like how you do your trading. You might throw a little bit here, and then when it goes down, you might throw a bit more. When it goes down, you might throw a bit more. But let's say it doesn't go down. Let's say it goes up, and then you're happy. But when it retraces, maybe you throw a bit more, go up. When it retraces, you throw a bit. So your money is like spread out so that you can consistently accumulate during every retrace, and you can keep catching up as it goes up. So investing is never you like one big pot throw there and then hope that it gets very you get a lot of money lah. So if you do that, right, this one is more like a long-term trading. I would say more like a long-term trading. Of course, I saying from the perspective of a retail trader lah. If you look at big institutional funds, right, they can definitely do this. They not only they can definitely do this, right, the reason why they can like one big sum go in is that they have the holding power. They have the holding power, meaning let's say some funds decide to drop 1 billion in Microsoft share here, and if Microsoft drop like another 30%, right, this fund can hold out this drop. This fund can hold out this drop. And then not only they can hold through this drop, right? They probably like this, their weightage in Microsoft is probably like 3% of their total portfolio. They still have another 97 billion, don't know doing what. So it's very different from how we trade, and they can hold through this while all their other stuff are still doing well. And when they recover, right, they are going to make that much profit. So they can do that kind of strategy. But for us, right, most of the time, if we throw one big lump sum here, we cannot afford that kind of drawdown. We cannot afford that kind of, and even if you can afford, right, that's not a good use of your money. So it is always better that you enter a bit. If it does drop, then okay, good, you enter a bit more, and you still have that cash at the side that like you have that cash flow lah. You can use it to trade, or you can use it to invest in something else. You are not stuck inside there really. And this kind of strategy is a little bit more, I would say, manageable. But of course, this one is do your fundamental. Do your fundamental, make sure the trend is up, and you don't end up in that scenario like SIA or Sembcorp Marine, those kind of case lah. So there's a difference between, like, let's say I have 20K, there's a difference between I plan to use this 20K and split into, let's say, 10 entry, maybe so 10 entry, so 2K times 10. Then I'm planning to split this 2K times 10 entry into Microsoft. Okay, so meaning like maybe here I buy 2K, and if Microsoft drop, I buy another 2K. If it goes up, I buy another 2K. So this is my plan. I've already account for the risk. I've already account for the amount of capital I have. So that is the so-called the method that I'm talking. But what you do not do is you do not save up 20K, throw your 20K here, and then when price go down, you go and save up another 20K, you throw another 20K here. This one is doubling down. The first scenario is planning out properly, but this one is big no-no. This one is big no-no. Okay. So try to ensure that hey, Wang, no worry. Never mind. I think you're gone already. Have a good night. Yeah, so this second one is averaging down without rhyme or reason. So let's say if you are doing that splitting, you split your entry into 2K and then you do this kind of thing. So you enter 2K here, and then maybe here you enter 2K, and then next round it drops, right? Then maybe it's time for you to go and find out a bit what's going on. Like the fundamental, go and this one you don't need to do fundamental yourself. I have never done 100% of the fundamental in what I invest. In fact, STI ETF is like my biggest investment holding. STI ETF is a brainless thing. I'm not even researching on what is it doing, because all the big caps are there lah. All the big caps are there, is properly diversified, so I'm not scared. And that's the so-called advantage of being invested in unit trust or ETF lah. But if let's say you do this kind of individual stock investment, right? Maybe if it dropped 3 times in a row, you might want to go and find out what's going on here. Like, why is it dropping? And you can go and read up, ask your broker, go and read up like other experienced fundamental analysis people that they are doing on, go and ask them, message people, and like at least get some picture. Even if you like don't really know the person or what, right? What you want is you want to gather information. Maybe you can zone out their opinions, but at least you gather the facts. So make sure that you can differentiate facts from opinion. Like I can tell you that, Microsoft, they buy out Activision Blizzard, so that's a fact. And I tell you, I think it's very bullish now. That's an opinion. So at least you know that now Microsoft buy out Activision, and you can go and like read out a bit more. At least you know now what's happening lah. You zone out the opinion part lah. And let's say if you at this point you research already and you feel that maybe not good already, like maybe the fundamental change, like you can see they are making a loss. One good sign is that the revenue drop, net profit drop. These are very good sign lah. And maybe you feel negative already, right? Then what happened is that you only have 4K here. You only have 4K of your initial 16K. You're not going to lose a lot. It's because of that, right? It's easier for you to get out also, because you can cut that loss easily. And now you have that 16K still free to go and do other stuff that you want. So that's how a proper dollar cost averaging works. Not just anyhow random, like anyhow don't know what's going on and average down. You have that capital ready, and then you plan it out, and then you slowly like do your dollar cost averaging. For 1%. Key cop. Okay. Earnings today. Oh, earnings today. Well, let me Google. Earning per share. Sorry, not earning per share. Earnings. Wait. Key cop. This is what? This is Q what? They never say Q what? Oh, thank you, Jack. You are my information provider. You are my information provider. Thank you so much. Oh, okay. American Airline. Oh, holy shit! They lower their guidance. Earnings are still okay though. Earnings are still okay. KeyCorp beats earning. Not bad. So what? Which is the okay? This is estimate. This actual. Okay, so they beat estimates by what? Their revenue is in billions. I thought they are like small chapalang. Bank United. Okay lah, earnings are quite okay. So what you will notice, right? What you will notice is that During finally some green at some light at the end of the tunnel. So during this period, right? During this whole period, when COVID-19 hits hard and everything dropping left and right, one of the key catalysts to market recovery was earnings lah. I mean, no matter what, at the end of the day, right? No matter what technical stuff you use, right? It is still a company's profitability that get push up your stock price lah. So earnings are very important, especially they need to beat not only the revenue, the net profit. Sorry, not only the net profit, the revenue must also beat. Yeah, BAC was dropping quite bad, but of course when they drop, right? Let's look at BAC. Bank of America. Of course, when they drop, right? It's like when earnings come out, it's not going to like suddenly shoot up like that, and that earning point is like your next lowest point. It's not going to happen. But at least what it will do is it will maintain. There will definitely be left right, but the uptrend will be maintained. So if not, we cannot have a chart where like the chart is like that, then earning come out, then this one suddenly become a bottom and the chart goes up, and then after that the earning back, and then this one becomes. So you will never see chart like that. You won't see chart like that lah. Most of the time maybe things might gap up, gap down, but they will still sideways, and unless of course you have a really super duper unexpected earnings that no one like kind of can predict lah. For example, like let's say PayPal earning was very bad, PayPal earning extremely bad. I think PayPal is due for earning already also. I'm quite curious. PayPal due for earnings already, and now PayPal is like doing very bad. And then maybe this earning, right? Their revenue doubled, and suddenly their net profit also doubled. Then of course that's something no one expect. Then this will be a bottom, and this whole thing will show all the way up. But most of the time, right, earnings are usually within the expectation. Even if they exceed, right, it's like exceed by a bit here and there. So things are still okay, but it keeps the general mood of the market positive lah, and keep the market bullish lah. So it is not that earning come out, then it marks the bottom and things will go up already. There will definitely earning out, but chart was still like that. But eventually things will be better lah. Things will be better. Yeah, so as I was saying, right, during the period, this the one of the catalysts was that it was the good earning that caused this whole recovery lah. So at the end of the day, earning is still important. And let's say if the bad earning or good earning cause your chart structure to break, that is where fundamental and technical analysis, they will align together. And of course, when we are trading, we always trade based on mainly technical first, but even technical also, we don't anyhow technical lah. Make sure that our stop loss, our trades are based on really key structure level. And most of the time, this kind of key structure level will break when bad things happen lah. Bad things happen, like the earning bad or what. So for example, PayPal, the earning was bad and the support broke, and then we were cut out of the trade. So that kind of thing lah. And PayPal is a very good example. Forget that I double down, But if we just look at the trade itself, right, the stop loss was I would say a very good stop loss, in the sense that we want a stop loss that once broken, right, it is going to like cannot make it ready. We don't want a stop loss that break ready then suddenly recover like that. So that's a bad stop loss. So these are the kind of trade that I take the stop loss, I'm okay lah. At least the stop loss is doing what it meant, what is supposed to do. So usually earnings, you have earning per share and revenue, but both have to meet. Actually, revenue more important than earning per share, because revenue is a gauge of how if whether your service is still in demand, but earning can be easily manipulated. For example, let's say this year your company doing very bad, and because your company is doing very bad, your business doing very bad, you decide to go into cost saving mode. You cut everything, cut here, cut there, everything cost saving, and then end up your profit increased from last year. Your profits increased by a bit from previous year. But the thing is, now your profit increase is not because people want your service, but because you go and cut costs. So the EPS can be a little bit not accurate, but the revenue is more important. The revenue definitely might increase. And if revenue increase and your EPS drop, right, your earnings drop, it can also be that maybe this company during this year, it decide to like make some investment, make some investment, or try to grow, try to make some heavy spending on upgrading their infrastructure. And that is a good sign. That can make your EPS miss the target or whatever, but that is still a good sign that this company is growing. So I always will view revenue ahead of EPS. If revenue green, right, then the EPS is still okay lah. If the EPS drop by a lot, then maybe good to find out why. Is it because of rising costs? Is it because there's a one-time expenditure, that kind of thing? So these are basic fundamental analysis lah. These are not the high-end complicated fundamentals. These are very, very basic. Any other oh, Berkshire revenue drop. No, this is Berkshire Hill, not Warren Buffett one. Okay, show more. How about tomorrow? Let's take a look at tomorrow and next week. Okay, see what are the stuff that is going to come up. Tomorrow only so little. Tuesday, Monday. Oh, Johnson & Johnson on 25th. General Electric also. Nothing much. Nothing much. I think Tuesday is quite interesting. 3M, Verizon, J&J, General Electric, Lockheed, Cambridge, Bangkok. Okay, how about 26? Boeing. Boeing. Actually, Boeing like doing quite okay now. Boeing like doing quite okay now. Let's take a look. Oh, finally everything positive. Everything positive. 44. 44 is not 44 not very I expect more. I expect more. At least close above this previous day candle. At least close above previous day candle. Wait, what I want to do Boeing. If you all want to sleep, you all can go. Don't have to entertain me. Like I will talk, and then I will take a look at the chat a bit, and I see that there's like 0 people ready, or I sleepy, I will go and sleep. Yeah, Boeing actually recovering quite a bit. In fact, from here, right, consistently making higher low. Consistently making higher low. They have a lot of debt though. They have a lot of debt. That's the funny thing. You see, counter like this, a lot of debt, right? And 2020, they were not really able to make any profit. But they are not really affected by the rate hike. I guess because they already dropped so much. I guess because they already dropped so much. So it's always good night, good year. it's always expectation versus the market price lah. Hong Kong is 800. Wow, nice. VIX is down 6%. straight Singapore market is really helped by the banks lah. Really helped by the banks. Still doing quite okay. Excuse me. Oh, going to 11:30 already. Okay lah, okay lah. We call it a day, okay? I think yesterday was also 11:30, but I think tonight US is slightly better than yesterday. So I hope I hope to wake up to email saying good things lah. not like US extended loss. Yesterday I sleep when everything was green. Morning wake up, I see a notification from I see notification from CMC saying US extended loss. I was like, huh, what? What? I thought it was I sleep during the green period. Like it was here. It was very funny. Where was it? Was it here? Yeah, it was here yesterday. It was here. We slept. I slept at. We log off at 11. We log off at 11. After that, it just go down all the way. So maybe today I shouldn't log off. I just sit here. I just sit here until morning. Okay, guys. So tomorrow, there won't be any session. I take a rest lah. I take a rest. I think we probably hope to see Friday recover also lah. And of course Saturday we have our usual webinar. So I still need to keep things to say for webinar lah. Cannot everything say during this kind of session. Okay. So have a good night everyone. So thanks for coming in and like pay war. Bye bye. Good night.